Hey everyone, and hopefully you're enjoying our event today. We wanted to take some time though to show you about a new product that we're developing right now, and it's in the beta version, but we've partnered with Prologis to specifically try to target the question of site selection. Now, a lot of people think about site selection as you go out and you find a space that accommodates your needs in terms of square footage, and there's a price associated, and then you just move on. Well, there's a lot of other tangential qualities to selecting your site for what you're trying to provide, and basically getting capacity, transportation, labor force. All of these things encompass a lot more cost than just straight rent. So some of these costs are very high. Transportation costs over half of the supply chain cost, whereas labor cost is over a third. So targeting these two specific issues is much more important than, say, trying to find something with the lowest rent. So rent is only accounts for about 5% of the total supply chain cost. So we wanted to combine that with some of these other aspects and qualities and put them in a dashboard that allows you to select these sites with a lot more confidence and a lot more data in a much more concise manner. So let's get started and look into the first screen of our site selection tool here. So what you're looking at is we've got a map over there of an area of geography. Say you're looking for a specific site in the Harrisburg, Philadelphia, Allentown triumvirate or area that you need to find some sort of warehousing or distribution center. Now this specific tool is basically targeting the distribution centers and solving that specific problem. So we're trying to find an area on this map that is going to figure out where's my lowest cost, but also has the best access to transportation and also my labor markets. So those things are kind of highlighted at a high level up in here. You see we have dwell time as well, transportation score, and labor access score. All of these things are very important, and trying to figure out which facility is going to give me the best access outside of something more like rent cost, et cetera. So we've got parking, a lot of high level, square footage, any kind of filtering that you need to do here in terms of if you're targeting a specific amount of trailer parking, square footage, dock door availability, etc. Again, this is more of your real estate data and stats that are going to help you quickly identify, okay, does this fulfill my service requirements at the base level? And then we have over here on this side of the tool, we have an area where we're trying to figure out, okay, you see those dots over there? We need to figure out which areas are going to best fit us. So we're going to go and select on the map, and we're going to be able to filter on this side which areas or which facilities meet our needs the best. So you can pick up to 4 of them, and we have 4 already selected here. And then once you select your 4 properties that you want to compare, you hit click to continue. And what this brings up is, again, the next layer of real estate stats. So this is going to be a little bit deeper dive. So we have things called the category here, and that's going to be defined right here in this category, last touch. That's going to be your facilities that are closer to your final mile, where things are going to be really close into the city, basically where your consumer is basically right next to you. The city. Now that's going to be within several hundred miles of the city itself. So these consumer centers, New York, Philadelphia, Chicago, these are city markets or areas right outside of these markets that are going to give you easy access to consumption centers. Multi-market. Now these are going to be areas or DCs that are within 2 days of stronger markets. So you're going to be basically in transition zones. And then you have these gateways. These are basically located next to your ports. Areas where a lot of freight is entering the environment, starting to come through, ports, railways. Think about where freight comes into the United States, and that's going to be your gateway markets. And then again, you're going to have these laid out clearly next to each other in terms of your high-level real estate stats, so you can get going and figure out exactly what your needs are. Of course, if you need higher amount of trailer parking, you can start to eliminate some of these if they're not meeting your needs. See them next to each other, as you're going to be able to adjust the bar of comparison here in just a few minutes, just to see exactly what these other scores right up here mean. Let's go ahead and click on dwell time and get going with some of the deeper analytics that are involved with this tool. So dwell time map. We've got basically an outline. You can see your markets over there on the map. You're going to have them color-coded to tell you exactly which markets have the dwell time. 88 over there in the Carlisle 3 map. Allentown up there is going to have your 115 average dwell time. So dwell time is going to be that amount of time that a carrier spends at a facility or around those facilities. This is stuff that is based on geofencing information that we have in the background. We also have telematics information that's basically scoring these areas and telling us how much time does a carrier spend at each one of these facilities. Why this is important to you? Well, some of these facilities, of course, are industry specific and they're going to have natural high dwell times. But if an area has an amount of dwell time associated with it that maybe it's due to other things such as traffic, congestion, ease of access in and out, these can also lead to high dwell times, and certain of these facilities can be associated with high dwell times, making it less likely for a carrier to want to do business with you. The higher the dwell time, the less preferable this is to deal with. So looking at our breakdown here, so property dwell time, this is going to give you by quarter each one of their average dwell times over the last 4 quarters, looking at Q4 of 19 all the way into Q3 of 20, and then that line right up above it is going to be your average dwell time for each of these facilities across the board. So you can see that the Prologis Park 33-2 has the highest dwell time overall, but it does have a little bit of a seasonal effect here. So we can see that there is a little bit of seasonality associated with this facility, but overall is going to have the highest amount of dwell time. Keep that in mind as we move down into this next one. So how is the dwell time comparing to the rest of that zip? So maybe there's another facility in that 3-digit zip that has a little bit better dwell time. So we've compared it, and that little dotted line that you see down there, anything above that line means that they're having higher dwell time than the average for the 3-digit zip. Anything underneath it means the dwell time is lower. The lower the dwell time, the better it is for people wanting to deal with your facility. So we're looking at Chambersburg being one of the best facilities to deal with. Keeping that in mind, we go ahead and knock on down to the dwell time versus distribution centers nationally. So how do these places stack up versus the national average? So Chambersburg 1, still leading the way, but all these other facilities are not that bad except for that Prologis Park 33-2, still slightly above average until you get into the third and fourth quarter, or the second and third quarter of this year, I should say. So again, knowing this, we can move on to the next step, which is looking at transportation. So we've established that one facility, Carlisle 3, has some of the best dwell time. Keeping that in mind, let's look at the categories for transportation and break this down. So the next layer of analysis that we have built in here is accessibility. A facility that's not very accessible is going to increase carrier costs. They're going to have trouble getting in and out of your dock. You want to make sure that they have as easy a path to your dock as possible and a way out as well. And that's what this one is doing right here. So looking at these 2 bars that we have here, we've got transportation, accessibility. Now this is going to be the proximity to things like subways, highways, just general access. So you're going to be able to get in and out of this area just in general. It doesn't have as much to do with trucks. That orange line, on the other hand, that's more about straight up accessibility to highways. So these are the things that trucks are really going to need to get on and off the interstate and get to your facility with. The higher that bar is, the better that facility is. Looking down here, on the next one, we're going to have our outbound tender market share. You're going to think, now, what is outbound tender market share? Outbound tender market share is how much of the overall national freight volume there is that is associated with that zip 3. So the higher the volume in a market, you can think about this in the way that there's going to be a lot of carrier activity in this market already. So you're going to have access to capacity. Truckers have already figured out how to get in and out of these areas. So the higher the OTMS value, the better that is for your facility, because you already know that you're going to have a lot of carriers used to operating in that environment. Carlisle 3 again leads the way with OTMS value being the highest in that market. Again, the rest of them are about on par. The next one is about your pricing power. Now, why is pricing power important? I think shippers in general, anybody interested in distribution itself, is going to want to have a better understanding of what does this market mean in the big picture. So you have a high amount of dwell time or a low amount of dwell time. That's a micro feature around your facility itself. It's not looking at it in the big picture. So regional carriers look at dwell time, et cetera, in there. Over-the-road carriers look at dwell time as well, but how does that fit in with their the bigger picture in terms of a national freight network. Because as we all know, these are all interconnected pieces. A lot of markets are production oriented, while a lot of markets are consumption oriented. And that's what this next tier really starts to answer those questions in the form of pricing power. So looking at our pricing power down there, you can see it's separated into origin and destination pricing power. The origin there in the blue indicates, as an origin, you're going to have either high or low pricing power. Anything over that dotted line right now basically means that carriers have a little bit more leverage than you would in terms of negotiating your prices. As a destination, again, that's going to be a little bit different perspective for the carriers. As they're coming into that market, they're looking at reasons why they should be able to get capacity. If a carrier has a high amount of pricing power in that orange line, or in that orange bar down there, that's going to entice them to come into the market to service that freight because they know that they can get the best rates possible. Again, blue bar, if that's high, that's not a great sign for your market in terms of shipping. But if that orange bar is high, that's a little bit better and a stronger signal for you to operate out of that market. Now again, the market right now all over the country is pretty tight. Carriers do tend to have a little bit more leverage just about everywhere. So knowing that relationally, this is going to change over time and it will update on there. Looking over there on the bottom left, you're going to see head haul index. Now the head haul index is going to tell you whether or not a market has more outbound than inbound. A head haul market has more outbound than inbound. Again, carriers just like with the pricing power index, they like going into markets that there's a lot more outbound than there is inbound. So we call that a head haul market, and they will price lower going out of that market just because they know that they can get, or they'll price lower coming into that market just because they know that they can get freight coming out. Now, if they're going to a backhaul market, as you see that Lehigh Valley, East 1 and Prologis Park 33 are, that's not a great sign. That means that you may not get a good amount of pricing power going into that market. This means that your carriers are going to price high coming in. So if you have freight coming in from the ports up in here to Harrisburg or Allentown or one of these 3-digit zips, carriers are not likely going to give you enough of a break because they have to figure out a way to get utilization. And a low amount of outbound freight in relation to inbound freight means that their odds are much lower than that. So you've got 2 backhaul markets and 2 head haul markets. Again, Carlisle 3 is looking like a pretty strong selection thus far in terms of overall preference for selecting a site thus far. So if we go ahead and move on to our next and last category, analytics table here. This is labor. Now labor, like I said, accounts for over 1/3 of the overall cost of supply chain. So what we're trying to do here is figure out exactly how we can optimize our labor costs. Now we're taking it into multiple layers here, and I'm not going to dive totally all the way deep into here because it would take a lot of time to do that. But I would like to slice out the whole purpose of this page in the form of saying, this is basically where your accessibility is to the labor force. How close are they? Do they have to commute? Are they involved in employment or in transportation and warehousing? How easily can I pull some of these people into my warehouse so I have access to labor and keep my facility running smoothly? This first one up here is giving you a labor access score and a labor force and zip code comparison. So labor access score telling you how accessible is the labor force in transportation and warehousing within 1 hour of my facility. The higher the bar here, that means the more labor force you're going to have in that market or that specific facility. Now, labor force and zip code is telling you in that specific 5-digit zip, that's exactly where my labor force is located. Now again, not everybody needs to live right next to the place that they work. In fact, most people don't. But if you have a lot of accessibility to a labor force within an hour's drive, say, you have the ability to have some pricing power in your labor force. And again, there's going to have a lot more people involved in that. And you don't necessarily have a lot of residential areas right next to industrial areas either. So keeping that in mind, it looks like Carlisle 3 has a lot of labor force in the zip code, but not necessarily a strong labor access score. So that means that you're going to have to hire from within that zip code. So that's not necessarily a bad thing, but people are not going to commute as much. Again, not necessarily a bad thing. You just have access to less labor force in general within an hour of that drive versus, say, the Lehigh Valley East and Prologis Park. Going on down here to this next tier, the percent of transportation and warehouse employment of labor force. So this is going to be a breakdown of how many people are within that zip code itself. So you can see Carlisle 3 has a big, strong blue bar there, indicating there's a ton of people located within that zip code itself. Within 1 hour, not so bad, a little bit stronger. It's pretty flat across the board with the other three, but you can tell that Carlisle 3 definitely has access to the labor force that you need, and within an hour's drive, it's not so bad itself. And this is within the specific transportation and warehouse sector itself. Up here, that's just the straight labor force. This is going to be much more targeted to your transportation sector. Down here in the commuters versus commute time, again, just breaking down, again, these people in Carlisle 3, they live right next to it. They don't have a lot of commute time involved. Over here in Prologis Park, even though there's a big amount of, a large amount of people within that area, they're going to have to drive to get there. So again, commuting is very important there, and maybe, this is one of those things that you're going to have to take into account when you're hiring a labor force. Depending on the wage that you're providing them, et cetera, they may not be willing to drive as far in as, say, whatever you're looking for here, depending on the wage that you're going to offer. So knowing those analytics as well make a lot of sense. So if we go over here and we look at our map, I've neglected our map in the top left here. This is going to be a good way to see. If we go ahead and click on that drill down button up there on the arrow, we'll be able to break this down. And you can see clearly in these 3-digit zip zones that we have isolated there, you'll be able to see just where some of these labor scores are. We've got the selected labor measure of labor access score accessed. If we just pull all the way out here, so we can get a good idea of what's going on around this market. Why is an 8.4 important? It's a pretty low score, but as we've seen, Carlisle, outside of some dwell time issues, isn't necessarily the worst market, especially when you're looking at it in terms of a straight percentage of transportation and employment within that population being relatively high. So there may not be as many laborers available in Carlisle, but a lot higher percentage of them are available to work in the employment and transportation and warehousing sector. So if we go ahead and pull out on our map over there, so we can see the perspective within relationship to the rest of the surrounding zip codes and areas here, we'll be able to see. So the yellow on the map is going to have the lower labor access scores, and you can see Carlisle is out there in the middle of Harrisburg and Pennsylvania, there on the edge of Harrisburg, the Harrisburg zips. So not as much population available out there, but the closer you get to Philadelphia and New Jersey, obviously population centers there, making those labor access scores a lot higher. So again, wrapping this all together, you have 4 different distinct areas to make your site selection. There you have it. Very different ways to look at your warehousing and involving transportation in the site selection process. Now, if you are interested in getting a Sonar demo or being a participant in this beta, be sure to go to sonar.freightwaves.com. Thanks.